Hopes of a Russia-Ukraine truce and India's engagement with Russia and China offer positive backdrop for gains as local policies seek to boost consumption. Auto, energy and telecom gain, but durables and pharma drag.
Sources tell CNBC-TV18 that the Chinese foreign minister has provided India assurance on fertilizers, rare earth magnets and tunnel boring machines as well. Now, the likely easing of rare earth magnet supplies first fires up auto stocks.
Shares of telecom operators Bharti Airtel and Vodafone Idea, as well as of Jio parent Reliance Industries, rally on expectations that higher data usage will help lead to tariff repair, with customers moving to higher GB plans.
And SEBI has proposed easing IPO norms for large issuers by lowering the dilution amount to as low as 2.5% for companies with more than rupees 5 lakh crore market cap and extending timeline for compliance with minimum shareholding to up to 10 years. Hello and welcome to Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Ekta, yesterday surely a good day that came in. Today, we started with the green, not bad, 50 points uptick was there, and now we've inched up a bit as well. Moving towards the day's highest point, if you look at it in terms of the market, more closer to the 25,000 mark now is what the Nifty is trading at, up 0.4%. Bank also has recovered from the day's lowest point. It was flip-flopping between the red and the green. Now comfortably in the green, 0.3% of gain. Good afternoon.
Hi, Vinny. Yes, absolutely. What we are seeing is follow-on buying after yesterday's trade as well. So that is indicative of the sense that maybe there is some amount of risk on, which is back on the table. But let's see. We also had the FIIs, which net bought around 550 crores in yesterday's trading session. So that too, let's see whether that sustains or whether there's any kind of momentum change, which is significant enough when it comes to the FIIs. The Nifty hovering around 25,000 as we speak. The mid-caps are marginally outperforming in today's trading session. So maybe the mid-cap index should show up for you, up around 0.6% at this point, and an advanced decline ratio, which is extremely firm on the advancing side. So that stands at around 2:1, 2,400 odd stocks advancing to around 1,600 stocks declining. And you can see that there's a huge gap between the green and the red line at this point in time. And let's see, seems as though it'll probably sustain us through as we go along. With the big trigger, obviously, we will be watching in terms of developments between Russia and Ukraine and, what the repercussions could be on a geopolitical front. So that would probably be the key factor to watch out for.
Absolutely. That is what we'll be keeping an eye out on. On that note, let's get started with the show with our Movers and Shakers segment, where we track a whole host of stocks that are buzzing in trade on the back of news flow. And first up, let's talk about auto stocks, right? Whether you look at Motherson Sumi Wiring, we have Ola Electric, Electra Green Tech, all these stocks are buzzing in trade. Now, what are the sources saying? That China may actually lift curbs on rare earth magnets. For more details on this, let's go across to Sudarshan. Good afternoon, Sudarshan. All of these stocks are, running away in trade today. What are these important details we should keep an eye out on now?
Good afternoon, Vinny. So another day, another positive news for the auto sector. If yesterday it was about GST rationalization, today it's about rare earth magnet issue. Now, what's the update? Sources indicate that Indian Foreign Minister had a meeting with Chinese Foreign Minister, in which Indian Foreign Minister has raised few issues, and that include rare earth magnet supply, to which he got the assurance from Chinese Foreign Minister that China will be looking into this issue. Now, market is expecting that China may lift curb on rare earth magnet supply. Remember, China almost controls 70 to 80% of rare earth processing. Now, if this curb is lifted, it will be positive not only for the major auto companies, but also for auto ancillary companies. But the biggest positive or biggest beneficiaries would be companies which have the major exposure to EV sector. So if you can see, top Nifty gainer is Tata Motors, up more than 3%. It has huge exposure to EV in the form of JLR. Even Samvardhana Motherson is up more than 3 to 4% because it has some of the clients which has huge exposure in EV. Then Sona BLW is up almost 3 to 4%. It's the same story that Samvardhana Motherson has. So that's one of the major reasons today all the auto companies you are seeing trading with big gains.
Absolutely.
Okay, all right, Sudarshan, thanks very much for that. In fact, the Nifty Auto Index up around 1% today, but it's already rallied 5% this week. And on a month-to-date basis as well, it's up around 7.5%. Let's not forget, year-to-date, it's gained around 11%. So the Nifty Auto Index building on in terms of gains today. But the other segment which is really in focus is textile companies. And we're covering that on our Movers and Shakers segment, as the government has scrapped the duty on cotton imports till the 30th of September. Vinny, tell us the impact.
So absolutely, this is some positive move finally coming in, right? Given those, US tariffs, the concerns around that front, especially for the textile industry, was major. Now, government has said that they will be scrapping duty on import of raw cotton, and this is going to be till 30th of September, starting with effect from 19th of August. So this scrapping of duty, as well as there's going to be scrapping of agriculture infrastructure development cess. This is also a part of it. So this both will be scrapped for a period of around 42 days. Now, the custom duty on imports of cotton was currently at around 11%. So at least for this 40-day period around, where these textile players may get some relief that comes in. And this move mainly was aimed to mitigate the pressure that was coming in on this industry due to that 50% tariff that may come into effect, which is imposed by the US government. So that was a concern, and we had spoken to a whole host of textile companies which also sounded this concern. So maybe at least some bit of that relief that comes in for this textile chain. So whether you look at yarn players, fabric, garment players, made up garments as well is what they're looking out for. So Gokuldas Exports, Vardhaman Textile, Wellspun Living, all these are buzzing in trade on the back of the ceasefire.
Okay, all right. So all of those textile stocks in focus. But Reema, over to you. Jio's new effective entry-level plan online is available at around 299 odd rupees. Give us a sense in terms of why Jio is in focus today and hence Reliance Industries.
Thanks so much for that. So Jio has tweaked its prepaid pricing, especially at the entry level. Now, earlier, the baseline or the entry-level tariff was you get 1 GB of data per day for 22 days. If you take a 22-day pack, you pay 209. If you take a 28-day pack, a 4-week pack, you have to pay 249. The change is that these entry-level plans are still available in a store. You go to a point of sale, a POS store, physically you will get it. But online, these plans are no longer available. Online, if you want to recharge a prepaid card, then the cheapest plan is now a 299 plan. But the change is, earlier for 249, you were getting 1 GB of data. Now for 299, you're getting 1.5 GB of data. So effectively, for the online medium only, for online recharges, the 1 GB per data plan by Reliance Jio no longer exists. Now, this is a positive because indirectly this is a tariff increase. According to certain estimates by brokerages, this can benefit Jio's ARPU anywhere between about 4 to 7%, which is why you are seeing the stock price do well today.
Okay, Reema, just want some more details also on, is there a case for Bharti and VI to scrap this 1 GB day plan as well then?
So, as I was explaining, now for Reliance Jio, online, if you want to recharge, you no longer have a 1 GB data option available. But for Bharti and Vodafone Idea, you still do. They still offer a 1 GB data plan per day, which is priced at 299 rupees. But if they decide to scrap it and they move to 1.5 GB of data, that means then the price goes up to 349. And here we're asking the question that after Jio has moved on tariffs, will its peers, its competitors also move on the tariff front? And the argument that people are saying is that possibly yes, because the industry has been calling for tariff repair, they've been talking about ARPUs inching up, and plus data is now become such a necessity. It is a requirement. Our data consumption has been going up day after day. So therefore now it's no longer an option to downtrade, to say that I don't want to pay more, I'm willing to do with less data for the same price. And therefore analysts are pointing out there is a possibility, or there is a case for its peers also perhaps to discontinue the 1 GB data plan, that's Bharti and Vodafone Idea, and maybe move to 1.5 GB of data per plan. If that happens, again, like in the case of Reliance Jio, you will see an ARPU boost even for Bharti Airtel and Vodafone Idea if they decide to follow suit.
Okay, all right, Reema, thanks very much for that. And in fact, Sudarshan as well as Vinny for joining into our Movers and Shakers segment to give us all of the buzzing stocks at this hour. Well, we'll take a short break, but we'll get you more on the markets and also focus on the monsoon mayhem playing out in the city of Mumbai and Maharashtra.
Welcome back to Halftime Report on CNBC-TV18. Markets have inched up a bit more when you're looking in the last 15 minutes as well. Now at 24,974, 0.4% of gain. Day's highest point is what the Nifty is trading at. Nifty Bank also has seen a good move coming in specifically in the last 30 minutes when you would look at it. And Nifty Bank is led by gains that came in for Kotak Bank, whether you look at it, that's buzzing in trade. We have Canara Bank, Federal Bank. All of these are managing to hold on to very strong gains. So yes, a good move that we're seeing coming in overall. But let's also pull up Devyani International. That's one stock that's buzzing away in trade as well today. A sharp up move that we're seeing coming in specifically for Devyani International. No specific news flow that we're seeing right now come in, but as of now, holding on to gains of 7% in today's trading session. But let's talk about the rains and the heavy rains that are happening and we're seeing and tormenting Mumbai since the last couple of days. Now, as these torrential rains lead to heavy waterlogging, transport disruptions, flight delays, the IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at a few places. Now, Santya is joining in with us for a ground report coming in from the Andheri subway side. And what's the latest update there, Santya?
Heavy rainfall in Mumbai, MMR and other parts of Maharashtra continues on Tuesday as well. Right now we are in Mumbai's Andheri area, and this road goes toward Andheri subway, but due to waterlogging caused by heavy rainfall, this road has been shut by the local administration. IMD has issued a red alert for Mumbai, Palghar, Thane, Raigad and other parts of Konkan belt. And keeping that in mind, Maharashtra government has declared a holiday for all the schools and colleges in Mumbai, Palghar, Thane, Raigad, Ratnagiri and Sindhudurg. BMC Commissioner told CNBC-TV18 that there are 235 water pumps active in Mumbai right now to ensure and to prevent waterlogging as much as possible. But due to the heavy rainfall, you can see that all the low-lying areas are, there's massive waterlogging in all the low-lying areas, especially areas in western suburbs. As you can see, this is how Andheri is looking like, this part of Andheri is looking like right now. Other than this, areas like Hindmata, Dadar, parts of Parel, parts of Science Circle, Gandhi Market, all these areas continue to witness waterlogging. Maharashtra government has requested all the citizens to ensure that they take all the precautionary measures, and they have requested the citizens to do not step out unless it's absolutely necessary. Maharashtra government has also deployed 14 NDRF teams all across Maharashtra. Out of these 14 NDRF teams, 5 are deployed in Mumbai to ensure that heavy rainfall, any untoward incident can be avoided. But as of now, people continue to suffer. There is massive traffic jam on the Western Express Highway, and trains, local trains on the Central Line are delayed by 10 minutes, and local trains on the Harbour Line are delayed by over 5 minutes.
Okay, all right. Thanks very much, Santya, for getting us that update from the rain itself. But we also, in fact, spoke to Shubhangi Bhute, who's the head of the Western Zone IMD, about the weather conditions. Listen in to what she had to say.
As of now, depression has been formed over Bay of Bengal, and it is moving northwestwards, and associated cyclonic circulation is also there. Along with that, wind shear is there, which is very much favorable for the extremely heavy rainfall over the Konkan region. For the Mumbai, we generally find this situation along with this offshore trough, which is very active. We can see that winds are quite strong in our rainfall along with it. This is a typical synoptic situation where Mumbai gets extremely heavy rainfall, which has been realized today morning. scattered extremely heavy rainfall has been there, and this situation is likely to continue for today from 8:30 of today to tomorrow 8:30. But the intensity of rainfall may decrease after evening.
Okay, that's the update coming in there from IMD. But on that note, we're going to step into a very short break. And after the break, we'll have Sacchidanand Dutekar from Trade Bulls, who will join us to give us the strategies that we should be keeping an eye out on the technical front.
Welcome back. Well, definitely picking up pace for the markets as we speak. So we have the Nifty, which has now hit 25,000. Remember, we hit 25,000 on an intraday basis yesterday, and we've managed to recapture that level. So let's see whether that sustains or not. So up around 0.5% currently for the Nifty. We have the mid-cap index, which is picking up pace as well. So up around 0.7% or nearly to that level as we speak. So up around just about 0.7%. The Bank Nifty up around close to 200 odd points. If you're talking about the key gainers within the Nifty constituents, you are seeing follow-on buying, which is taking place for Tata Motors. So that one is the top gainer on the Nifty, up around 3 odd percent. We've been talking about the entire auto space, which is buzzing, and that's being led by Tata Motors. Reliance Industries is up around 2.5 odd percent. So that big boy, which has gained around 16% this year, is up around 2.5 odd percent at this point in time. Adani Ports, Bajaj Auto, Adani Enterprises, all of these stocks are showing gains of anywhere between 1% to around 2.5 odd percent at this point. So good going for the markets. We're definitely seeing some amount of momentum on the upside. And like we pointed out, the advance decline ratio, there's a huge gap between the greens and the reds, or the advances and the declines. And that's continuing to sustain, in fact, probably getting better and wider as we speak, giving you a sense of the momentum that we're seeing in the broader market. So that's the update coming in on the markets. Good going, 25,000 is possibly just about here at an intraday basis. But we do have Vimakshi now joining in to tell us about all the other stocks that are moving around in trade. It's a very active day of trade. She's here at the wall to tell us what she's tracking. Vimakshi, over to you.
Well, absolutely, Ekta. Let's first look at Tata Motors. The stock, like you pointed out, is buzzing in trade today. Remember, it's the 6th consecutive day of gains for this particular counter. Of course, this comes in after sources suggest that the Chinese foreign minister has assured India of addressing the rare earth magnet import issue. And given the exposure that Tata Motors has to the EV space, the stock is flying away in trade today. In fact, this is the biggest intraday rise that we've seen since May 15th of this year. The other stock that we're watching out for is IFGL Refractories. Earlier in the day, the stock was up almost as much as 20%. It's holding on to that gain as of now, locked in that upper circuit. In fact, this is the biggest intraday jump that we've seen for this counter since May 12th, and around 6.3 lakh shares have been traded so far, which is almost 16 times higher as compared to the 30-day average. So the up move is coming on the back of very strong volumes for IFGL Refractories. The other counter that we're watching out for is Vardhman Textiles. Now, the government has temporarily scrapped import duty on cotton imports. This bodes well for the company, and in fact, driven by this news flow, the company has posted the biggest intraday advance since April 3rd, and in the last 2 days itself, the stock is up as much as 11%. Last one we're watching out for is Devyani International. The stock has perked up in trade today, up almost 7.5%. This is the biggest intraday rise that we've seen since Feb 1st, and this is coming on the back of very strong volumes. The trading volumes are almost 7 times the average for this time of the day, but on a year-to-date basis, the stock is still down almost 8%.
Okay, Vimakshi, thank you so much for that. Important to keep an eye out on all those buzzing stocks. But what are we watching out for in the world of FNO now, given that we're seeing a bit of a run-up that came in again in the markets as well in the last 30 minutes? 25,000 has come in again, Nigel, today. Now, what are the keys to watch out or levels to watch out for, as well as in the FNO strategy? What are we keeping an eye out on?
Well, Vinny, if you looked at it yesterday, that was a bit of a teaser you saw with regard to the short covering. And if the bulls have the momentum, and you can push this market up, the entire movie will play out. And this market is aggressively net short. Those shorts will be forced to cover out. And just take a look at what's happened today. The Nifty is higher. There's some mild open interest down. That's telling you there is a bit of covering out there. The Nifty Bank, in the last 2 weeks or so, that was a relative underperformer. That's come in for a bigger short covering bounce. Even at the start of today, it underperformed a little bit, but you can see that one has perked up and the open interest is down by close to around 2%. Now, it appears on the Nifty, there's a strategy that's playing out, which is a short straddle. What is that? The 24,900 call, 24,900 put. You pocket the premium of both of them. That's nearly around 210, 220 rupees or thereabouts. And then you're hoping that the Nifty expires in the next 3 sessions in a particular range. And take a look at it. On the put side, there is aggressive writing that you're seeing because the premium has come down sharply out there and there's a massive open interest build up. But on the call side, keep in mind 24,900 call, you're in the money out there. And yet the premium out there is more or less flattish. So the bears are giving an equal fight over there. Otherwise you've got the direction right in the money call option, but the IVs have come off a little bit. There is writing that we're seeing at this strike as well. And if that short straddle is at play, you pocket 200 rupees, 24,900 minus 200, which gives you around 24,700. And you add 200, which is 25,100. So that's the broad 400-point range you're working with, if in case the short straddle is at play. Moving to the Nifty, well, we've conquered the 20 DMA. The 50 DMA is something that we'll be looking at. So that's the next resistance mark. While on the Nifty bank as well, you've seen a good bounce. That in fact is just on the verge of taking over the 20 DMA, but the 50 DMA remains a little bit elusive out there. So keep an eye out on both those two technical marks. Stock futures, Paytm, that's come out of nowhere. It's seeing a lot of buying interest today, and there's a massive open interest build up as well. So fresh long addition is what you're seeing on Paytm. PNB Housing Finance, that's the stock I highlighted in the final 30 minutes of trade yesterday. I said this is the one that's likely to come out of the F&O ban. Now, since it's come out of the F&O ban, it has valuation comfort, and the sheet is waiting by for the next CEO announcement. That stock is one of the biggest gainers today after coming out of the F&O ban. The shorts in the system are getting a little bit nervous. And today I'm saying watch out for PG Electroplast. Why is that? There were massive shorts in the system. Now that appears, at least as of now, at the calculation as of now, it appears it's a candidate to come out of the F&O ban. Remember, another heavily shorted counter. So I'll keep an eye out on PG Electroplast as well. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's what's taking place in the F&O space. Let's get a technical check-in now. We have Sachithanan Nutikar joining in from Trade Bulls to tell us what he's tracking this afternoon. Sachithanan, welcome to the show. Well, we were just, Nigel alluded to the 50 DMA for the Nifty, which stands at around 25,018. What's your sense? How important a level is that? And do you think that we're going to get there soon enough?
Good afternoon, Ekta. Good afternoon, Vinny. I've been following the 20-day exponential moving average on the exponential side, which is placed at 24,770. And that particular mark has been, convincingly breached. The Nifty is trending above the same as well. When we look at the 50-day exponential moving average support, I think that is placed somewhere close to around 24,820. So unless we don't see the Nifty, falling below this particular level, the trajectory remains on the positive side. If you look at the overall consolidation today, 24,900, 24,850, the put writing action has been very significant, and we are of the opinion that eventually the Nifty will scale towards 25,160, which is the overall retracement resistance of the fall that we have seen from 25,670 towards 24,340. So I think the market is finding a good support here. The supports are rising. Right now, what we are observing is that 24,850 is an ideal support below which the trend momentum may change. But as of now, the data is convincing enough that this particular rally may continue towards 25,160 and may also extend towards 25,400. So the bias for the Nifty remains positive. Even if you look at the Nifty bank, the 50-day exponential moving average is acting as a resistance. 55,850 would be a critical mark above which we may see, a good short covering move unfolding. But this particular level has to be, managed on a closing basis. On the lower side, 55,820, 840, which is the 20-day exponential moving average, I think this particular support is very strong as of now. Even if you look at the convergence of the short-term averages, it is indicating that sooner or later we may see again one more swing of momentum in this particular pocket. So we are expecting that the rally in Nifty Bank may also stretch towards 56,500. So we are expecting both the indices to scale higher. From a trading perspective, for the Nifty, one can keep a stop loss at 24,880 on a closing basis and review positions at 25,160. For the Nifty Bank, the stop loss should be placed at 55,700 on closing basis, and positions can be reviewed once the Nifty Bank starts scaling towards 56,500.
Okay, those are the levels we'll keep an eye out on. But Sachidanand, talk to us about your trading strategies, as well as, if you could see the charts for Devyani Internationals as well. That's buzzing in trade today. It's up 8%. But overall, when you're looking at it month-to-base basis or last year also, it was not doing anything exciting. So on the charts for Devyani also.
Sure, Vinny. First of all, the two stock ideas that we are convinced, where we expect a good, strong momentum rally. The first one is Tata Motors. Now, this particular stock is showing fresh signs of a impulse. If you look at the overall structure, a 14 days decline has been covered within 6 days of up move. So this is a very strong sign of a reversal. If you look at the weekly RSI, it has given a breakout above that 50 mark on a fresh note. So we are expecting that the rally in this particular counter could stretch towards 735 levels, where its 50-week exponential moving average is placed. So we are recommending building long positions in Tata Motors, keeping a stop loss at 688 on a closing basis. The other stock on our radar is BSE. Even here, if you look at the consolidation for the last 4 weeks, it has been very healthy. Its daily RSI is now trending confidently above that 52 mark. If you look at the averages, there is a good strong convergence of its 5 and 20 exponential moving average, somewhere close towards 2480 levels. So we are expecting that this particular support base may hold, and we may see a rally in this particular counter towards 2640, 2700 levels. So we are expecting and recommending, building fresh long positions in BSE. One can keep a stop loss at 2490 for a positional target of 2700.
Okay, all right, Sachidanand, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies. We need to take a short break, but on the other side, Manisha Gupta will join in. She has with her Rakesh Mehra, who is the chairman at the Confederation of Indian Textile Industry. Stay tuned.
Welcome back. Joining us on the show now is Rakesh Mehra. He's chairman at the Confederation of India Textile Industry. Mr. Mehra, hi, thank you for joining in. And overnight, it's been an 11% that the duty that was on import of cotton has been taken off. What is your first reaction on this, given the fact that this is only till 30th of September?
Yeah. Thank you very much, Manisha. Yeah, it's definitely a welcome step. We have been requesting for it for over a year now, and I think we are all very happy that this has happened, in spite of the fact that it's for a short period. But nonetheless, it's a beginning, and we will continue to initiate and put our efforts in getting it extended.
All right. So when you are looking at extension, which will coincide with the Indian cotton crop as well coming in, do you see a further decline in prices? Would the Indian farmers then like it?
No, sorry, I did not add it fully. We have always requested to allow free cotton from March to September so that it doesn't coincide with the farmer's crop. We have always been requesting for that. And once that is in place, I think it will be a big boon to the textile value chain and the entire textile industry.
Mr. Mehra, just allowing free duty import for 42 days does leave a lot to interpretation.
Yes, definitely. But like I said, it's still the beginning and it's a welcome step. There will be some consignments in the high seas or in the ports or somewhere, so which should get some advantage, should come to the industry.
Okay.
I would not write it off and I would not rubbish it. It's a good suggestion. It's a good beginning. And as you know, it's not easy. It's a very difficult job for anyone, whether I'm in the government or you are in the government, to remove duty on cotton, which is so, the farmers are involved. So the government has its own compulsions.
How are you also now looking at imports? Because, the kind of numbers that we are working with at around 38, 39 million tons, perhaps, bales rather, is the highest number ever in sense of imports, would you say? And with this duty now going off, are we looking at even a higher number?
Yeah, see, the import is there mostly against advance license, that is advance authorization. So for our exports, people are continuing to import cotton for the simple reason that cotton in this country is more expensive. Even though we have the largest acreage and we still have it, it's more expensive because of the MSP, the minimum support price, which the government has its own compulsions, like I said. So that makes our cotton more expensive. So nonetheless, that whoever can import is doing it, whether in advance license or through Australia or wherever, from African countries, wherever you find it better, they do it. And this will continue to happen as long as we are more expensive than the international prices. See, we are here, like we are the two providers of employment, the largest providers of employment, that is agriculture and textiles. So while they have to protect agriculture, one has to see also the impact on the textile value chain. And hopefully we are engaging with the government all the time to see how this can be addressed. That is either remove the duty or give DBT. There are so many other ways of doing it, but the raw material must come to the value chain at a very competitive price, which is comparable to the price which is paid by our competitors in other countries.
I would agree to that, Mr. Mehra. The other thing is that you have a tall ask. India has export target of textiles at $100 billion by 2030. Are we on track for that?
Well, that I think still we have to, we are waiting and watching. It's all very speculative today. We don't know what's going to happen to the US, our tariffs there. So I think it's not, we have a target. And I think if the geopolitical situations are okay and our negotiations are all right, I see no reason why we will not achieve it. But as you know, it's very difficult to predict today what will happen, what is there in store for us for the next 3 months. We don't know.
I know. Mr. Mehra, what is the export as of now and how far are we from that target though?
No, we are still pretty far away. We're pretty far away.
Where are we right now?
We should touch about 45 billion.
For this year, for this season, you're saying?
Yes.
You mentioned about tariffs, and that really was my next question. And what is the impact that you are working with in sense of your calculations? Because when you look at India's tariff, which we are looking at 25, perhaps 50 in the next couple of weeks, and every other competitor or peer countries have it anywhere between 90, 20, even China is at 30%. How are you working with these tariffs, with import duty now done away with? What are your other asks from the government?
No, we have requested the Honorable Ministers of Commerce and Textile to support the value chain by extending RODTAP, increasing the rate of RODTAP, ROSCTL, interest subvention. So we have been asking, but there are limitations in funds also. And like I said, there is still too early or too premature to conclude that it's going to be 50 or even more or 25. We don't know. Till yesterday, till Mr. Putin met President Trump, the feeling was that it is going to go even beyond 50. Now the feeling is that we may come back to 25. So I think let's wait and watch. But our ask from the government I have already listed out. And the situation is really bad. Our customers have already started asking us for reduction in prices, that let's share the impact. So I think August 27 will bring about better visibility on what will happen in the future.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. We need to take a short break with the news that the markets are definitely in fine fettle. So we have the Nifty, which is up around 100 odd points, and the mid-cap index, which is up around 0.6%. Take a break. Up next, we'll focus on key stocks such as Reliance and JSW Infra, which are buzzing. Welcome back. Well, steady for the market. So let's get in Sudarshan. He is joining in. He's going to give us an update in terms of a couple of important brokerage notes which have come through. And he's looking at Reliance and JSW Infra. Sudarshan, over to you.
So Citi has written on Reliance Industries after SEBI's proposal related to large IPOs. And Citi believes that if this proposal fructifies, it will be positive for Reliance Industries. And the reason is SEBI's proposal says that basically for the large IPOs, post-IPO market cap of more than rupees 5 lakh crore, for that minimum public offer size can be reduced to 2.5% from 5%. So at 5%, offer size would have been $6 billion plus. And because of that, it can have the fairly large share and it would have been difficult for market to absorb. But once that is reduced to 2.5%, basically minimum offer reduced to 2.5%, then offer will be amount to $3 billion plus, which Citi believes that it can be easily absorbed by market, and that removes the overhang, and that's the reason Citi has a buy call on the stock with a target of 1690 per share. Another note is Jefferies has come out on JSW Infra. It has a buy call, and here the target price is 375 per share. It has maintained three major key catalysts for the stock. First one is 31% capacity addition via commissioning of under development of ports or terminals, and second, potential project wins with an uptick of private-public partnership project awards by government-owned major ports. Also, capacity increase that company has planned by FY30, that is 400 million tons. Jefferies believes that it is intact and it will have an upside risk. Another sweetener that company believes that that is the logistics for the company. So overall, both Citi is positive on Reliance Industries, and you are seeing a big move in the stock, and Jefferies is positive on JSW Infra, and the stock is currently up more than 1%.
Okay, Sudarshan, thank you so much for highlighting both the stocks which are in focus on the back of brokerages as well. But on that note, we're going to slip into a very short break. We'll get you more on the markets, and we will also focus on a whole host of pharma stocks. After the break, stay tuned in. Welcome back to Halftime Report on CNBC-TV18. While Nifty is managing to hold on to gains of more than 100 points in today's trading session, we do have Pharma that's in focus as well. Overall, the Pharma sector as of now is a bit muted, but there are some of these stocks, Ekta, that are buzzing in trade. What are you watching out for here?
Well, yes, I'm watching a couple. I'll start with Alembic, which is in focus because they've received a US FDA nod for a particular drug, macitentan tablets, or the generic version of Opsumit tablets. Now, the market size is quite large. It's around $1 billion. The drug is used for hypertension. Glenmark is the other one. They are going to be launching the drug micafungin for injection, which is basically going to be used in injections in the US. The distribution is going to begin in September itself. Market size is just about $60.7 million and is used for fungal infections. That stock is in focus as well. And Zydus is in focus. Interestingly, Novo Nordisk has received US FDA approval for Wegovy, which is basically the anti-obesity drug to be used for a condition for liver, which is MASH. Now, MASH is a liver condition which basically means that there's fat accumulated on the liver and is linked to metabolic diseases and obesity. So hence, Wegovy has been approved to treat that particular liver condition in the US. Now, this makes Wegovy the first GLP drug to be cleared to treat MASH, and it impacts around 5% of adults in the US. Why is Zydus in focus? Because they have a particular entity, a new chemical entity called sarglitazar, which is undergoing phase 2B clinical trials for MASH itself. So now, because Wegovy is come into the market and maybe there could be a possibility that other GLP drugs could get approval, that means that Zydus is a particular drug which is under clinical trials right now, could probably see more competition within that space.
Okay, important ones to keep an eye out on going forward as well. But, you know, with that, we're actually going to wind down this edition of Halftime Report on CNBC-TV18, leaving the Nifty again close to the 25,000 mark, up 0.5% in the trading session, and a good recovery that we've seen, or actually good momentum in terms of gaining momentum furthermore for the market in the last 1 hour as well. With that, a goodbye from Ekta, myself, as well as the team who put this show together. Don't go anywhere. Up next, your Business Lunch.